As we all rightly say, like the gold market is a compendium, an ecosystem of different players actually playing into place, from the central banks to government entities to geopolitical influence. So this presentation is to actually discuss all those entities that actually play a big role in determining what actually happens in the gold entity. And I'm going to be taking you through this presentation to actually give you a perspective of what you should actually know as an investor investing into the gold ecosystem for yourself and for your family. So as we likely claim that most of our presentations would contain forward-looking statements, would contain projections and accurate statements. Now, these statements are actually very estimates, but we advise and recommend that you consult your financial advisor before you make an investment decision. As we likely said, most of our presentations will contain facts that have been properly backed by research. But before you make an investment decision, we plead that you consult your financial advisor. Now, Dukia Gold is headed by a global team of different players playing into play. Our chairman is Mr. Tunde Fabimi. Our managing director is Madam Bose Wolabi, Chief Operating Officer, Mr. Paul Beasley, and all other sub-technical officers and directors who play a key role in determining the gold ecosystem. We are led by a team of highly experienced, well-rounded professionals, making sure that each part of our project actually reaches its full potential and is definitely in line with international best practices. Now, what are we going to be discussing today? We are going to talk about the aims and objectives of this presentation. Now we are going to now look at gold strategic return from commodity to global anchor as a hedge against inflation, currency risks, and uncertainty. We are now looking at the structure of the gold market. What are the pillars that determine how the gold market plays? From the mine supply, the recycling supply, investment and jewelry demand, central bank demand. We're now looking at the structural constraints. What are the hindrances for the gold industry to actually play its full potential? We are now looking at the supply constraint, the political uncertainty, resource nationalism, and most importantly, the global gold demand. What is the big players that actually play a huge role in determining the global demand of gold? Next, we look at the gold price. I think most people actually came in because they felt that we are going to talk about how our price is determined. But definitely we'll explain that to you in this presentation from all the markets that play a huge role, from the London Bullion Market Association, the COMEX, ETFs. We are going to look at some structured variations, gold versus USD, gold versus Naira. Most importantly, we are now going to look at the geopolitical influence of gold and how all these key uses actually play a huge role in determining what the price of gold is. Next, we'll look at the structural trends shaping the future of gold, environmental, social governance, technology and tokenization, central bank digital currencies, the strategic implications of all these things for emerging producers. Then we'll look at a conclusion and we'll wrap up with a Q&A session based on what we presented. Now, to officially welcome everyone into the presentation, I'll invite the Managing Director, Madam Bose Wolabi, to give a welcome address as we take you through this presentation. MD Man, you have the floor.
Good morning, everyone, or good afternoon, everyone. It's my pleasure to welcome you to this February edition of our monthly seminar, which seeks to provide gold market insights, which will drive your investment decisions. As Emmanuel has said, the title of today's seminar is The Dynamics of the Gold Market, Supply, Demand, and Global Influence. I'm therefore delighted to have you all here as we continue to share knowledge, invest together, and also grow together. We are meeting at a fascinating time indeed, with all the recent happenings in the world, which has seen the total demand for gold at a very high level, which is, as they say, historic high. which has been driven by central bank purchases and shifting investment trends, which we are seeing in the gold market industry. Today, Emmanuel has told us the various topics that areas that the presentation will cover, so I won't go over that. But we at Dukia Gold want to provide you always with a clearer picture, which will further enhance your decisions and which will encourage us all to key into what the world is doing, which is investing in gold. And we believe that if we do this, we would help ourselves, we will help our families, and we would in turn help our country, Nigeria. So I encourage you all to listen attentively and note your questions, put them in the chat box, and we will respond to them after the presentation. Once again, I thank you for joining us, and I hand back to Emmanuel so that we can get started. Thank you, everyone.
Thank you so much, Ma, for that welcome address. Thank you so much, Ma, for that welcome address. I will just continue sharing with the presentation. All right. Now, to give us a perspective on the gold industry and the huge dynamics that are playing into the gold market price from the dollar index usage and from the Naira index, I'll be inviting the chairman, Mr. Tunde Fabomi, to just open the presentation up as we seek to get clarity on the perspective of the gold industry and the dynamic factors.
Okay. Welcome everyone to the February edition of the presentation for today. More important is that I want to thank all of you stakeholders, shareholders, and customers for keeping faith with investment in gold and believing that it's a safe haven for the future of everyone, especially anyone trying to preserve wealth. I also want to thank God and also inform you that in South Africa, just about a week and a half ago, we had a very, very interesting and extremely important chapter in our minds to market understanding of issues. For the record, Dukia Gold, your darling company, can confirm to you that the engineering procurement, including management of our 2,000 ton per day, which will be scaled by the special grace of God shortly very soon to 40,000 ton per day production, has been contracted out to one of the very best engineering procurement company in the world. It's called SGS Bateman. I would share part of that joy with you, and I would also recommend that all of you please get seized of the facts, read a few of the newspapers that have covered that event. We also want to use today to thank the Honorable Minister of Solid Mineral Development, Honorable Dr. Alake, for his giant strides in representing Nigeria and ensuring that anyone in the solid mineral industry who is serious enough can get the right enabling environment and support to do what is best in class. Our signing and engaging SGS Bateman is in the so-called right direction for us, but more importantly, because we can assure you now that the sourcing of the raw material, which is gold, that will come out to you as a finished investment grade commodity, is assured now for life. And because full assurance, it's important. Hello? It's
Hello,
now
sir, we can
very,
hear you.
very important. Yeah, and you didn't display the screen, young man. It's very, very important that we ensure that your sourcing of raw material and the provisioning of that finished product is one that guarantees you that your gold every time will remain an investment grade gold. And therefore, congratulations to all of us, both shareholders, stakeholders, investors, customers, and indeed the Nigerian government and the good people of Nigeria and Africa. That's the first good news. The second good news is that I want to thank all of you and all of us who stood very strong in the midst of what everybody panicked between January and early weeks in February. Everybody shouted, "Oh, there's a crash." No, there is no crash. There can't be a crash. Gold is bound to get to $6,000 this year. How soon? It's just a question of when, how it will be corrected. But certainly it will be corrected, but more is that it's going to continue on its shape to the future. As you can see, anyone who listened to us early in 2020 and early 2021 or early 2022 or early 2023 or early 2024 or early 2025, and you bought yourself some gold, you will look back in 1 year and say, "See how well the Lord has done." This graph shows you the 1 year movement of gold, roughly from 2,800 to almost 5,000. We know now that gold has entered Series 5. It will consume Series 5 this year. It will reach 6,000, certainly. Maybe it will reach $10,000, but there has to be certain fundamental issues that take place. So part of what may make it happen and what will make it happen will be discussed at this meeting so that you can be rest assured that keep your gold. Gold is not what you open like a fridge and consume daily. Gold is what you keep in the deep freezer. You understand? It's that commodity, that asset, that investment that is at the base, the foundation of your wealth. It's in fact today fairly more important than housing or investment in real estate. I will rate gold now higher than real estate. It's more important than currency, cash, surely. And I would also rate it above the dollar, especially. So if anyone is accumulating gold, you are buying gold, I think it's a very wise thing to do. It's also a very knowledgeable thing to do. It's also a fashionable thing to do. And would gold go out of fashion? No, it can't. Even its near cousin, silver, is beginning now to show that precious metals truly matter a lot. And indeed, if you remember the famous saying in the good book, he said, "Silver or gold have I none. But what I have, I need to give to you. I have wisdom, I have knowledge, I have understanding of what I think gold would do in the new and the near future. I think gold will preserve wealth. Gold will preserve wealth against inflation, which is still elevated, especially in Nigeria. Gold will preserve you from the vagaries of the so-called socio-political environment. Gold will preserve you from the effect of tariff and toughness in trade conditions and toughness in what they call a transition environment, especially as Nigeria goes into its early stage um, um, campaign and other conditions that will prevail in the so-called world economy in 2026, 2027. The next graph, which I would like to show you, has to do with how the world sees a currency, which all of us used to believe in. That's the United States dollars. There is a value to the dollar. There's an intrinsic value to the dollar. Just like gold, it rises and it falls. But since the United States chose to weaponize the so-called financial system, everybody has become extremely worried and wary of storing their assets in that currency. And all of us know that just like any good bank that makes profit, most banks make profit because of the commission on turnover, COT. Sometimes they call it 1 per million. If, however, you used to put all your money in one bank and you are perhaps doing trillions of naira, you will know that that bank will earn a huge amount of commission on turnover from you. But if you avoid putting your money through that bank, and that bank now has a competitor in Asia called China, in Europe, you understand, called Germany or France or London, or perhaps has every available crypto platform to sell and deal in currency and exchange goods by trade, by barter, then the quantity of naira that you used to put through that one bank may halve or may reduce. I think the world has pivoted away from a full dollar trade transaction by as much as 25%. But the world, they believe, is still trying to avoid the dollar transactions, and it may result that maybe 50% of the transactions that take place in the world is taking place in a currency other than the dollar. Will the dollar continue to earn the commission on turnover that it used to earn 10 years ago, 5 years ago, in 10 years' time or 5 years' time? It's a certainty now. The answer is no. Even the attempt to create crypto and make it more domiciled in America, whether it's Bitcoin or whatever, hasn't particularly helped. Everyone has found a new way to trade. Trade by barter is happening, and of course, settlement of trade, maybe in gold, or the ability to show the next person that I can pay your money, I have gold, is becoming more important. And what everybody is just doing is converting dollar into gold first and trying to spend the balance of the dollar in their hand before the trouble that will come the dollars will finally crystallize. What this is doing is that depending on the magnitude of the shock that is coming, the quality and the quantity and the value of the dollar itself has begun to reduce, to shrink. And it's going down little by little. Of course, it's also being corrected at the same time by the government. But there are three problems in the world. The man who has that large currency called the United States is running a very large deficit budget. And the only way to finance that deficit budget is by, quote, issuing treasury bills, raising taxes, and trying to see how the government of the United States can become profitable, such that one, they can meet their daily obligations to their citizens and also meet their debt obligation, especially interest rates, to anybody who buys their bonds. All of us know this story. Neither a lender nor a borrower be, but even if you're going to borrow money, ensure you have the capacity to pay. Even if you cannot pay the principal, please have the capacity to pay the interest on that debt. The United States is beginning to look like a country that would maybe have interest on debt in excess of $2 trillion. Unfortunately, their internal capacity to generate $2 trillion to service that debt is going to be a bit problematic. For them not to default, they think they will have to print more money. And everybody knows that if you print more money, they always say too much cash chasing too few goods. What's going to happen automatically is there's going to be inflation and or devaluation of that currency. So anyone who is still thinking of storing his money in dollar should think twice and take good advice from extremely informed people to be able to ensure that when you do so, you don't panic out of it. But if you are thinking of long-term storage of your wealth, we would recommend still that you take good advice and try to put it in gold. Either as an asset, physical allocated goods, or perhaps you consider and buy investment in a gold producing entity. It's called shares, so that your shares are mirrored to a company that is also properly exposed to gold as a product. So these two maps and graphs that I've shown you, I will try to show you one more so that we can then domesticate it. Again, this is quite interesting. This is the new kid on the block. It's called the Nigerian Naira. Just when they said to us, petroleum subsidy is over, everything is over, and they were going to then adjust the artificial currency of the Naira to the dollar, everybody panicked. And suddenly the exchange rate between the dollar and the Naira went from 3 digits, less than 400, less than 800, to almost 1,000, 1,800. But to the greatest joy of all of us who believe in the competence of an Harvard-trained central bank governor, and by the way, we were in Harvard sometime together in the past, we know today that the economy is being very well managed. And to the extent that the economy is being very well managed, President Bola Ahmed Tinubu can take credit to the fact that hopefully we may have a situation where the Naira comes from 1,800, which it was, maybe to 1,002, at worst 1,003. If we get too lucky, we may actually have the Naira exchanging at 1,000 to 1. But early days yet, what does this mean? Imagine, God forbid, that you took 1,800, multiplied it by 1 million, and used it to acquire $1 million. Unfortunately, that dollar which you acquired at 1 million has lost value in dollar by 10%, which means rather than have $1 million, what you now have is 900,000 naira, $900,000. Then imagine that you then had to change it on a day when the naira to the dollar, by the grace of God, had reached 1,000 to $1. Surely, what you will get back cannot be 1.8 million, 1,800 times 1 million. What you'll be getting back is 900,000 multiplied by 1,000. Would you say you made a profit? You may say no. Would you say you made a loss? It's left for you to calculate what I've just computed in front of you. But it's the likely scenario that may come if the American economy, especially the dollar, keeps being mismanaged by the many vagaries of Trump, tariffs, trade wars, actual wars, and indeed material uncertainty in visiting, using America as a place of business. There's a huge rumor today. He wants now for all American banks to give him the citizenship status of everybody that owns a bank account. There's what they call flight to safety. And I want to see any bank that would survive what they call a bank run, when everybody suddenly shows up and says, I want my money transferred to Switzerland, or I want my money transferred to China. It will take a while, but honestly it can happen. Now, all these three should be brought together to understand why gold matters at this time. Gold matters because whatever happens to tariff, whatever happens to trade, whatever happens to uncertainty, whatever happens to inflation, gold is bound to help you survive that shock. So every central bank in the world has taken a business decision, a strategic decision, to convert most of the available free cash in their so-called national reserve to gold. The most important person who is doing it today is China. And just for you to know, what China is doing is what every other person has done. The United States dollar is largely still backed by gold. The amount of gold to reserve carried out by the United States is far in excess of 60%. Most of the banks in Europe and most of the European countries' central banks also have gold to cash ratio in excess of 40 to 50%. Luckily or unluckily, if you remember, China used to be referred to as a less developed country less than 40 years ago. And they are still sometimes poorly referred to as a developing country, which is not very true. They themselves have woken up to put part of their national reserve in gold. And guess what? They have been able to increase the ratio of their gold from roughly 15 to 28%. If they were to copy the Americans and push their own to 60%, certainly the Chinese still need to convert in excess of 40% of their national reserve into gold. That would mean on an average yearly basis, they would need to buy between 600 to almost $800 billion worth of gold just to stabilize their national reserve. Every other country in Africa is not even near that, and they themselves are also struggling to do so. Ghana nearly attempted it, but again, they are broke, they sold part of it. But honestly, they've also kept the portion that does not threaten their daily cash reserve in gold. Nigeria is trying, and you see the way in which the currency is also being managed. Eventually, we would increase the valuation and the gold portfolio in Nigeria also. If every central bank is doing that, I think any company that has profit and wants to maintain its reserve should buy gold. Any bank that has an MRR and a CRR and needs also to be able to maintain its balance sheet needs to buy gold. Everybody who wants to retire into happiness needs to buy gold. Therefore, it's a joyful thing for me to say, follow the person way Fabi road. That's what they say. Even if you don't know where you're going, at least a central bank knows where it's going. Several central banks know where they're going. They direct and they actually influence the world economy. Most big banks, JP Morgan, HSBC, etc., know where they're going. Every one of them have said an average individual must keep a minimum of 20 to 25% of his long-term investment in gold. 25%. Before, it used to be 60-40, nothing in gold. Then they allowed gold at 5, but they've all come to the final realization that that portfolio needs to be readjusted so that a minimum exposure you should have for long-term investment is 25%. So on this note, I would simply just say, welcome once again to this seminar. I apologize that we started a bit late. We would try to address that. But again, I must thank you all for believing in us and always showing up at the right time. I yield the microphone to Mr. Emmanuel. Welcome to Dukia Gold, all of us. Thank you.
Thank you very much, Chairman, for that perspective you gave on the gold industry. I'll just segue into the presentation as soon as possible. Now, we are talking about gold strategic return from a commodity to a global anchor. And in looking at this, the central bank on February 24th just upgraded the monetary policy rate, and it reduced it by 50 basis points to 26.5%. Now, from 27% to 26.5% is not really that much of a big deal. But what the implication certainly means is that definitely loans are going to become slightly cheaper because businesses can now borrow costs, and the rate of the interest rate has reduced, so they can now borrow more. The second implication is that inflation could ease further because the lower interest rate can help businesses manage a cost better, as I said in the first point. But clearly, the Nigerian bonds may earn slightly less, which is going to put a mild pressure on the rate of the Naira, as our chairman discussed. So I'm not saying that that we are going to expect a miracle very soon, because it's just 50 basis points, 27 to 26.5%. But these are the implications that the monetary policy rates by the Central Bank of Nigeria will actually do to the Naira and the strength of the Naira as we see it. Now, given this fact that the central bank has cut the rate slightly, but kept every other controls like the asymmetric curve, the liquidity ratio in place, Nigeria is gradually moving from an aggressive tightening, as we currently know, into a very cautious easing. They want to open the economy more. They want businesses to actually take turns to borrow money and perform other business transactions. But with all this uncertainty that we're actually seeing, as interest rates begin to fall, holding your Naira cash becomes slightly less attractive because the return that you get from the Naira is not going to be as normal as before. In the midst of that uncertainty, investors may now begin to look for alternatives to actually hedge their assets in the rate of the falling yields of the Naira. And what they're actually looking for has always been gold, because gold becomes more attractive because it protects against inflation, currency risks, and does not depend on the policy of a central bank. But by the way, 26.5% is not cheap money. If I'm borrowing money from the central bank and I'm getting a 26.5% interest rate, that doesn't mean I'm not still going to pay additional cash when I'm returning back the money. So the cost of capital will definitely remain elevated, and the expansion of other businesses may be very, very cautious. But in that sense, as investors look to hedge their assets against the inflation rates and against the demanding yields on the Naira, gold has now become the best attractive policy for them. And why does that actually happen? The first is no counterparty risks. Unlike fiat currencies, government bonds, or bank deposits, gold is like a tangible asset that holds no counterparty risk. It's not dependent on the strength of a Naira, the strength of the USD, or the financial stability of a government entity to make it unique. The second is it's a hedge against inflation and monetary expansion. Gold price will definitely increase as the money supply expands. Now, in central banks, take a policy to actually do quantitative easing, gold still will retain its value and hedge against inflation based on all current economic conditions. The third is investor confidence and trust. Gold functions fundamentally on trust, just like fiat currencies, but the real essence is that it's not actually signed by a central bank governor. Like when you check your Naira notes or any note that your currency is domiciled in and check, you actually see a signature of the central bank governor authenticating the fact that this Naira is genuine. Gold doesn't actually need that signature from any bank entity to actually determine its value. It's definitely intrinsically valuable. The fourth is central banks accumulation. Definitely, our central banks around the world, as our chairman discussed, from the People's Bank of China, are actually increasing their gold accumulation. And this increase will actually give far better value into the gold interest rate, which I will definitely discuss further. Definitely, its performance and intrinsic value, being the fact that it has crossed the $5,000 mark, gold will actually be the best bet the best hedge against inflation, against all economic uncertainties. Now, the central bank has taken a decision. As I said earlier, we are not going to expect a miracle tomorrow morning and saying that all interest rates, inflation rates are going to come down. But in the midst of that uncertainty, the case for gold as an alternative and reliable store of value is still very, very valid, being the fact that it's intrinsically valuable, being the fact that it has no counterparty risks, being the fact that it hedges against inflation, and being the fact that its performance is globally acceptable. Definitely, as our chairman discussed, the United States dollar has lost 78% of its purchasing power against gold in just 10 years. So the problem with fiat currencies is that they will fundamentally be devalued. Now, we are not trying to criticize Nigerian Naira or any other currency, but as investors seek other options to better hedge against the effects of devaluation and inflation, gold has actually stood the test of time. Next, we are going to talk about the structure of the global gold market and what actually influences the global gold market as we take a look. Now, gold market is just a global system like any other market, like your tomatoes market, the pepper market, the yam tuber market, all over the world where gold is bought and sold. But the problem is that it has two main parts. There's the physical market of gold and there's the paper market of gold. The physical market is where the real gold exchanges hands. It includes gold bullion, gold coins, jewelry, technological pants, where you mine gold, you refine gold, and you sell it in major cities. That's the physical. So there's actually an exchange of gold between two or more people, two or more entities, two or more organizations, or even two or more central banks. Now, there's the paper market where you are trading commodities linked to gold, not actually the actual metal. They have their futures contracts that those traded on the commodities exchange and gold ETFs, whereby their investment funds backed up by gold. Now, the funny thing is that you may be thinking, how do people actually trade gold without having the physical metal itself? Because unlike you go to your regular store, you make a purchase, you pay in Naira, they give you your commodity, and they take that Naira back. So how can people actually trade gold without actually having the gold physically? Definitely, it now includes, this is just fundamentally that they are speculating on the price of gold, either directly or via derivatives, like contracts for difference, CFDs, without actually exposure to the metal. Let me give you a perfect example of how this works. Let's say the price of gold is $5,000 an ounce, $5,018 an ounce to be precise. And you say, okay, the price of gold is going to go to $5,200 an ounce next month. And I say, okay, the price of gold is definitely going to reduce to $4,900 next month. Now, next month reaches, the price of gold definitely now reduces. You, as a person that said the price of gold will increase, you've lost $100. Now, me, as a person that said the price of gold will resist, we've gained $100. So what that means is that both of us, we didn't exchange 1 ounce of gold. We are just speculating where the price direction will actually move. And this is exactly what is done in the paper markets, as I mentioned earlier. Traders look to go to diversify portfolios, but they're actually speculating on the price. Okay, gold is going to move to this direction or that direction, and they make a return of profits based on that speculation. Like I said, it's purely speculation. It's not actually real because nobody can actually determine the price of gold, even though we seek trends from global banks around the world to know how the gold trend is moving. Nobody can precisely say, okay, gold is going to move to this particular point in time, this particular currency value at this particular point in time. The same way when you don't own barrels, when you're trading oil futures, and the same way you don't own euros when you're trading foreign exchange. You're trading based on the determining factor of the price. And that is what happens in the commodities exchange, the futures contracts. But for ETFs, the exchange traded fund will hold the gold in vaults, and you as an investor are buying shares in that exchange traded fund. So you don't actually have the gold bar physically. You don't keep the gold bar in your pocket. I don't, as all cases, you don't have actual access to the gold bar. You are just holding a financial share linked to gold. These are the two main methods of actually trading gold without having actual access to the metal, which I'll explain further. Now, who controls the gold markets, both the physical and the paper markets? Who controls these two determining factors and how do they actually correlate? I think the first example is the central banks. Now, the central banks, they don't use gold. They are not short-term purchasers of gold. They are not trading price differences. they hold gold reserves as part of their national wealth, and they buy gold to diversify away from foreign currencies to build up their financial security. Now, because they buy huge amounts of gold, definitely in tons, like you can see from my graph here, China actually increased their value plus 357.1 tons in 2025. So because they're actually buying more and more gold, when they buy these large amounts, the market gets confident of gold has a real store of value. Now, as I said earlier, they're not actually trading the price. They're not predicting where the price of gold will go. But when they make these large purchases, definitely the prices will go up. And you can see as example, throughout 2025, in Q5, from actually September down to December, you can see the People's Bank of China investing a whole much and accumulating a lot of gold assets. And this was actually making the price to definitely increase. So central banks, they don't control the gold price, but they play a very key determining factor in determining how the price of gold moves. The next are bullion banks. They are specialized financial institutions that facilitate the trading, the clearing, and the financing and storage of physical precious metals. They provide liquidity in over-the-counter and exchange-traded markets, and serving as intermediaries between producers, that are the miners, and consumers, which is you and I as investors. So they ensure continuous liquidity, they offer bullion accounts, and they are just like intermediaries. When you need a bridge between you and a mining company, the bullion banks actually make sure that that bridge is facilitated. Now, if they reduce their trading activity, the volatility will actually increase. But if they increase their trading activity, the liquidity will actually increase, which now determines based on the gold price. Now, the third people who control the gold market are the mining companies, like Dukia Gold, who actually, they do the exploration, they discover the gold deposits, they extract the golds, and they sell that production into the market. They control the primary supply of gold, of physical investment grade gold directly into the market. So gold supply is remaining inelastic because from actually exploration to actually delivering that 1 ounce of gold into the market can take about 10 to 15 years. So this makes the gold supply relatively inelastic, and as mining producers, they actually ensure that every gold that we actually discover under the ground is made worthwhile for you and I to trade. The third are the refiners. These are people who refine the raw gold into 99.5% or 99.99% purity, and they convert Dory bars into standard bullion coins. They ensure that all the bars that are actually discovered meet international standards. They are the ones that help make sure that the refined gold you get is actually credible and deliverable. And most of them operate under a set of rules and regulations like the London Bullion Market Association, which makes it acceptable for you to actually buy investment grade bullion. So miners, producers, and refiners actually control the physical supply, the primary supply of gold into market. So this is how it works. Miners actually now produce the gold. Refiners will purify it. The bullion banks will trade and distribute it. The central banks will actually accumulate it. And investors, you and I, will now react to the macroeconomic conditions. So definitely, it's not one entity that controls the supply of gold, has denominated in this chart by the World Gold Council. You can see the flow of gold from exploration companies, which are major mining companies, junior mining companies, artisanal miners, down to refiners, then to the bullion banks, which are OTC markets and metal exchanges. Then before you now get the bullion, which is actually used for jewelry, for bars and coins, for technological parts, or even the bullion that's used for ETFs, for central banks, and every other trade that you can actually think of. So who controls the gold market is not actually one specific entity. There are many players in place that actually determine how much gold you get, the price of gold, and how much value you get from the gold you actually buy. And these players playing a critical role in determining the gold price. Definitely, what drives gold demand? As I mentioned, okay, because we use gold for our jewelries, gold chains, our gold necklaces, our gold earrings, because central banks are actually investing in gold to diversify from the United States dollars, because investors are actually building up reserves to actually hedge their portfolio, because most technological parts are actually used for gold. These are actually critical influences that determine the demand of gold by the whole market. And this supply and demand statistics was given by the World Gold Council, showing you who is determining the supply of gold, that's mine production, the recycling, the producer hedging, and who actually is determining the demand of gold by each particular sector. But most importantly, I'll just look at Q4 2025, which we just recently came out from. And as you can see from the chart, for gold for jewelries was accounted for 438 tons. Gold, that is your gold necklaces you see, the gold watches you see, anything jewelry accounted for 438 tons in Q4 2025, according to the World Gold Council. For technological parts, it was 82.1 tons. Those are for hard drives, SSDs, and many technological parts you see in industries. Now, for investment grade, that's you and I, the investors actually building reserves, we are accounted for 595 tons of gold in Q4 2025. While for central banks, they accounted for 230.3 tons of gold in Q4 2025. So all these players, because they need gold for jewelry, because they need gold for technology, because central banks are still purchasing gold, because you and I are still purchasing gold to build our portfolio, all these are actually creating that demand of gold internationally. And the demand of gold didn't just start, okay, in Q4 2025. It started since the dawn of time, down from the Egyptian century, down towards the 17th, 18th century, down to today. The demand for gold has definitely been increasing because all these parts are actually being manufactured to give you a perspective of how it is done. Now, the next is the supply constraints of the industry. Has any industry you will know, there are definitely going to be challenges that actually play a huge role in determining what is happening. And the first is declining ore grades. Now, they have been exploring gold since the dawn of time. But because of these high-grade deposits have been depleted, miners must now process more tons of rock to extract the same ounce of gold. And new discoveries tends to be deeper and way deeper under the ground. It's not like the case of Dukia Gold, which we have explored a considerable area of math and we have found high-grade deposits. But in most other countries, they face this similar challenge that they have to spend more energy, they have to use bigger processing plants, they have to use increased operating costs to actually get the same ounce of gold as they were getting in previous years. Because of this increased energy, increased cost in extracting the same ounce of gold, this is why the industry will actually extract a ton of money in processing. Because definitely over the past, it's not a fault of a particular player. It's just most high-grade deposits have actually been extracted from the ground. And most people have to look further down the ground to actually get the same value in gold industry. The next is the rising all-in sustaining costs. Now, the all-in sustaining cost is just a word to actually represent the true cost to produce 1 ounce of gold. If you're taking into account your mining costs, your processing costs, your sustaining capital, your community obligations, your compliance, your regulatory functions, and every cost you make to make 1 ounce of gold, definitely these are the issues that actually affect the gold industry as a whole. And it's not that these costs are actually arbitrary. Definitely, we have the trend of inflation. There's too much money chasing too few goods, which is definitely reducing the value of the money you spend. We have far deeper and technologically complex mines because of the declining ore grades, as I mentioned. We have very strict environmental standards because most investors will now actually give you a look if you're not following specific regulatory standards. And also, there are higher regulatory and compliance costs because you have to also see the ministry, you have to see various agencies to actually make sure that you're actually compliant. All these costs in total will actually increase your all-in sustaining costs as we move on. Definitely, the production timeline is actually a big deal. You can't just see gold on the ground today and next week you have a gold hour, your gold ounce, you have a ton of gold or you have an ounce of gold. It doesn't work like that. From the discovery, exploration phase down to the production phase can take between 10 to 15 years. So even if the price of gold hits $6,000 an ounce today, like, okay, we wake up tomorrow morning and see that the price of gold is now $6,000 an ounce, this doesn't necessarily mean that new supply will enter the market as fast as possible. So this creates the rigidity between the exploration and discovery phase down to the production phase where the gold is actually brought out from the ground. Also, there's ESG and regulatory pressures. Now, most people, before, they were not considering the environmental and social governance as part of a big deal with gold mines, but has the consequences of climate change have made investors globally around the world have begin to look at their ESG brochures of mining companies, making sure that every mining company that is actually available will now conduct very detailed environmental impact assessments. You must now be sure that you are not actually extracting, but you are contributing to that community where you are hosted. You must be definitely sure that your reports are standardized and they have reporting codes for that. You're definitely sure that your costs are standardized before they actually give you money. So because of this rising ESG and regulatory pressures from investors to the gold industry as a whole, these requirements now increase the capital expenditure of gold, and it's actually one of the supply constraints of the gold industry. Now, these are just 4 I listed, from ESG to long production timelines to rising all-in sustaining costs and declining oil grades. But there are actually more issues that actually underplay the gold industry. We have resource nationalism. Even if a foreign investor, like I don't want to mention any company name, if a foreign mining company discovers a gold resource in a particular company, like in Nigeria, for example, you may have political instability here and there. The change of government may not actually prioritize what the foreign investors want. There's always a change of government every 4 years. And so most investors are maybe not quite confident about what new governments will bring to the table concerning the mining industries. Now, definitely, we applaud the initiative and vigor of Honorable Dr. Dele Alake, who is the Minister of Solid Mineral Development, for taking this initiative and for actually giving a conducive environment for mining companies to thrive. But it's not going to be the same as those before him or those after him, because this change of government actually make mining companies to actually begin to scrutinize how they actually participate and extract gold ores from the ground. And definitely, as we've seen in other countries, there's also definitely resource nationalism. Even if a mining company invests a ton of money to actually create a gold mining company in another country, the government may just wake up one day and say, okay, we are taking ownership of our assets, and this leaves the mining company in jeopardy. So these are, although not a very critical issue, these are some issues that actually play a role in the structure of gold supply around the world. This means, what am I saying? Even in high price environments, the supply growth remains very slow and limited. And this structural rigidity is one of the key reasons gold can experience prolonged bull cycles when the demand arises. So if the demand of gold is reaching $6,000 an ounce, $7,000 an ounce, these underlying issues, not the fault of anyone, these underlying issues actually make sure that that supply is structurally constrained. And this determines actually the gold price. I think the major emphasis of this presentation from the customers. The problem is now, no single person sets the gold price. Sorry to, most people actually think, oh, Dukia Gold sets a gold price. That's virtually impossible. Dukia Gold cannot set the price of gold. And no single person, no single institutions will set the gold price. Even though gold is globally traded from physical markets, like I mentioned, from paper markets, like I mentioned, from ETFs, definitely all these entities, like I discussed earlier, actually play a key role in determining the supply and the pricing of gold across the world. Unlike a company stock, now you can go on the Nigerian Stock Exchange, NGX, and see the value of a company stocks. Gold trades 24 hours a day across multiple continents in different forms. They are still trading physical gold and they are still trading paper gold. So all these interchanges across the world make sure that the pricing system of gold is decentralized. It's not one person sitting down and saying, okay, the price of gold will be $5,000, so let's make it $5,000. That's virtually impossible. Because gold is actually traded in various forms, these institutions actually create what they call the gold price that you actually see. But first and foremost, let me give a particular one, which is the London Bullion Market Association. And this is the International Trade Association that represents the global over-the-counter market for gold and silver bullions. They are actually the ones that oversee the benchmark pricings for precious metals. And if you are trading physical, deliverable, investment grade gold, is the LBMA price that you actually now references. And it serves like a benchmark for physical gold transactions around the world. So if you're looking for a standard pricing that for physical exchange of gold bullion, that's gold bars and gold coins around the world, the LBMA are the price you actually reference. And the LBMA is not a organization that sits behind the computer and actually sets those price. They composed of 15 participating banks like the JP Morgan Chase, the HSBC, and they submit buy and sell orders through their electronic platforms. Now, one chairpersons will now adjust their buy and their sell orders from these 15 participating banks and now establish a 1,000 ounce tolerance, which is your global physical benchmark. That's why when you go to our site, at the top of your screen, you see a particular price of gold axe and gold bead, which is the LBMA price. Now, because we are an entity trading physically deliverable investment grade gold, we reference LBMA pricing standards. That's why when you get on a call with any of our customer reps, they say, okay, we are using the LBMA price as reference. And this is why it is referenced that so, because they are the benchmark pricing for physical gold exchange. Now, for paper gold, which are contracts that are linked to gold, the commodities exchange actually dominates. Like it's a division of the CME group, and approximately 99% of COMEX trades are settled financially rather than through physical metal delivery. As I said earlier, people are just betting on the speculating. Let me use that right word. They are speculating on the price of gold. And it's the commodities exchange that settles these speculations financially in cash rather than in physical metals. They speculate on the price and commodities exchange settles that price. So they operate through futures contracts whereby buyers and sellers agree on prices for future delivery, and most of all these prices are settled financially. Now, the futures price, the gold futures that you see, XAU, USD, and all the financial terms that I see around the world, they are heavily influenced by the commodities exchange group because it's a short-term price discovery engine. While London Bullion Market Association determines the physical spot market, COMEX serves as the primary engine for global price discovery through its high volume derivative contracts, whereby people are speculating on the price of gold. Now, as I mentioned, the ETFs, exchange traded funds, actually determine that price of gold. And one of the most important is the SPDR Gold Trust, which is a physically backed exchange traded fund that enables investors to gain exposure to gold bullion without holding the metal directly. It's just like you buy your stock and shares on the Nigerian Stock Exchange or any other exchange you buy from. You are actually investing in a company, and that investment in that company gives you exposure to the gold metal itself. Now, you cannot go to SPDR and say, please give me back my gold. It's virtually impossible. They are going to help you get exposed by your investment to the gold market, but you cannot come back them and actually deliver the gold in person. So when you're buying an ETF shares linked to gold, the fund will now buy the physical gold either for the LBMA or any other accredited dealer. And by that same increase, when you invest money and the fund actually buys gold, this actually supports the price increase. So this ETFs gives you an exposure to gold, unlike Dukia gold that actually gives you back the real gold that you're actually looking for. ETFs just gives you an exposure and they actually influence the gold price. And others are central banks. As I mentioned earlier, central banks are not speculating on price exchange. When they purchase gold, they are removing physical metal for the market and storing it as their national reserves. In the balance sheet of the CBN 2025, the CBN had approximately 15.5 tons of gold as part of its balance sheet. So the central bank never speculates. They are not reacting to short-term price fluctuations. They are not checking to see, oh, is gold going up or down? They are just storing gold as part of their own national reserves. So when central banks buy gold, they take out of the physical market and put it in their vaults or in their banks. As I mentioned earlier, because this new mine supply cannot be increased quickly to move from discovery to production, this buying behavior creates a structural price flow. So even when gold temporarily declines, if the price of gold drop, as central banks keep accumulating, it helps stabilizes that volatility. That's why we always mention that the demand of gold is always going to be there, because there is no central bank around the world that will not stop buying gold at an increase. And this is why, because of the central bank accumulation as part of their national reserves, they actually play a good role in influencing the price of gold, not setting the price, influencing that price of gold, because they are definitely going to keep buying. Also, geopolitical uncertainty determines the price of gold. When there are wars or rumors of wars or banking sanctions or sovereign debt levels, most investors actually panic and remove their golds out of the ecosystem and remove the gold out of the market as part of their investment portfolio. So when there is uncertainty, as there is uncertainty around the world, people like you and I will definitely begin to stock up our gold value as a portfolio hedge for our children and grandchildren. So the global uncertainty around the world plays a big role in actually how the gold price moves. That was why towards the ending of January and beginning of February, you could see the drama that happened around the gold markets, from the price shooting as high as $5,500 an ounce, the prices coming as low as $5,000 an ounce, and the whole jargon. All those were just motivated by sentiment, investor sentiment, into how the risks were played around the market. So we, as an individuals, actually play a huge role in determining the price, even you and I. So it's because of this, it's a continuous global process. Now, like, let's say if gold futures on COMEX is $3,500 an ounce, and physical benchmark price in London is $3,490 an ounce, people will begin to buy the physical gold in London because it is cheaper and sell futures on COMEX because it is higher. So they have seen an opportunity to buy from London and sell in COMEX. What this does is the prices, the continuous purchase from London Bullion Market Association will push the price up. Because of the increase in demand, there will be a corresponding increase in price. So as the London Bullion Market Association's price begins to increase to $3,500 an ounce, the price on COMEX, because of the continuous sale of the gold on COMEX, will definitely begin to decrease. What I'm trying to explain to you is that it's a continuous global process in why different markets interact dynamically. If we check the price of gold on COMEX and check the price of gold on LBMA, and we keep buying from LBMA to sell on COMEX because of the opportunity, the prices will definitely adjust to make sure that there's a reference standard price which you actually buy your gold from. So they are not markets operating independently. As people are buying, people are selling, people are increasing their investments, central banks are buying, all these other entities actually play a huge role in determining what the price of gold is. Like this graph showed you, gold price is determined from futures traders, people who are speculating on the price. Is actually determined from physical dealers who are actually settling on that price, from arbitragers, from ETFs flows, from central bank accumulation, from geopolitical risks, and from you and I, who are actually increasing our portfolio in gold. All these entities as a whole, interacting simultaneously, play a huge role in determining what the price of gold is. So it's not one independent market that actually sets the price. Even though the LBMA is giving a reference and a benchmark price for physical deliverable investment grade gold, and the COMEX is giving a reference price for gold trading on futures, has derived by speculation, they are interacting together to actually play a big role in what you see on the value of gold. That's why, as you always say, the volatility of gold is always uncertain, because these people are interacting simultaneously. Whether you're sleeping, whether you're waking up, whether you're doing anything, people are still buying, people are still selling gold. So no single entity, not even Dukia Gold, has that power to control what the price of gold is. It is actually purely based on market phenomenon. So next, we are going to talk about, okay, what are the trends shaping the future of gold? What are the upcoming things you are seeing around gold industry to give perspective to what we are playing? And the first is ESG. Most people are actually now concerned by the kind of gold, by how much of gold you have. They're actually far concerned on what kind of gold you have. Are you sure? Are you selling to me gold that will actually possess stollery, not involved using child labor, that is actually purely under a registered entity, that I'm not going to find issues when I'm trying to sell it? All these rules and regulations are imbibed onto what we call ESG, which actually plays a big role in determining the supply constraints of gold. So the World Gold Council sets what they call the responsible gold mining principles, which actually, for everyone that actually seeks a partnership in influencing and trading and discovering and selling gold, the World Gold Council has a set of rules and regulations that every entity may follow. So when you hear us say we are in alignment with the World Gold Council, this means that all of our sourcing producers, all of our provenance procedures are actually within a defined rule book as vetted by an international organizations. And this was just for the mining side. For the refining side, the LBMA has the LBMA Responsible Gold Guidance, which actually requires all gold refiners, people who refine gold into 99.5 or 99.99% purity. They have a responsible gold guidance to make sure that your gold is actually purely certified. Now, the LBMA Responsible Gold Guidance is no small joke. They have a rigid, very rigid set of rules that everyone must follow to make sure that if you're actually buying gold, you have to meet these particular standards. And why are these rules even in place? You would have said, okay, why are we even having to deal with all these rules just to explore and trade gold? The net effect is that the responsible gold actually sourced from responsible sources has lower financing friction. It can be easily be bought, and most importantly, it can be easily be sold at a premium. So if you are buying gold from any entity that is not following these rules, this rigid set of rules, definitely you are going to be selling your gold at a discount. And nobody sells gold at a discount. Gold is actually sold at a premium because of the rules that are actually kept in place to make sure that these golds are sourced and directed under a rigid set of manners. Now, the next trend that you can actually see in influencing gold is tokenizations. And this is whereby people are actually taking physical gold and actually building it on a blockchain infrastructure. Now, Dukia Gold has a tokenization program, which will be discussed way further down the line. But it's actually people who actually want access to gold without having to keep the bars of gold in their process. We did that through our platform, whereby you can actually see how much gold you have. But people want a faster, more convenient blockchain standard ways of doing it. And people are now turning into programmable bullion. So whereby the gold is built on blockchain rails and it offers faster settlement, transparent proofs of reserves, and it's just the bridge between what those rigid set of rules in ESG and the liquidity. Tokenization is actually the bridge linking those two diverse entities together. So it's just giving people an access to have gold as tokens on their mobile phone so that they can make sure that they always have visibility and insight into how much assets they have. And also central bank digital currencies. These are a form of countries' fiat currencies that are regulated by the central banks. We had our own issue with the e-Naira, which was launched in October 2021. Then after the October 2021 launch, we entered 2022 with the Naira redesign. Whether that was intrinsically valuable or politically motivated, I can't say, I don't know. But the e-Naira was an alternative, an open door into cryptocurrency and blockchain by the central bank. But as you all know, the e-Naira highlighted a very fundamental problem that technology alone does not determine the adoption of that currency. Trust, usability, economic incentives matter more. Because of that Naira redesign, people had to source physical notes through fintech apps from your natural fintech apps you use around the world. So the private sector now provided a far more convenient and user-friendly way of delivering cash to people in all forms. But I know the central bank is still going to look at the e-Naira and explore other digital currencies. They're working in line with the Securities and Exchange Commission to see how cryptocurrency can blockchain actually become institutionalized in Nigeria. But definitely, I can't say a thumbs up or a thumbs down. But the e-Naira just proved that the trust of Nigerians towards a cryptocurrency Naira wallet, whereby 1 Naira token is actually 1 Naira individually, was actually breached. So in environments of currency instability, inflation, Naira design, everybody will stay up into gold. Because of the central banks are actually opening a floor to cryptocurrencies. That's why blockchains and digital tokens are actually playing a full force. So they are playing a pivotal role in determining how cryptocurrency influences gold adoption across the ecosystems. Now, for emerging producers like us, gold production, we can diversify national reserves. Gold production can exchange foreign exchange flows. Gold productions can drive central bank accumulation. Gold productions can reduce geopolitical tensions, and gold production can actually give you a benefit of the doubt of hedging your portfolio for yourself and for your family. In essence, all emerging producers who integrate ESG, technology like tokenization, and resource development will actually shape the future of gold around the world. Technology is always going to play a key role in the adoption of gold. ESG is going to actually play a fundamental role in the adoption of gold. But mining producers, miners, and refiners who are actually key into it are not going to actually just participate in the gold market. We're actually now going to shape it. And Dukia Gold, as an entity, is actually participating by including technology and ESG guidelines into our operations to make sure that the gold that we sell on our platform is structurally and fundamentally valuable. As I mentioned, it's Dukia Gold that actually is hosting this presentation, and we are a leading gold and precious metals reformer in Nigeria and West Africa. We source gold ore from the floor, and we actually mine, refine, and sell to investors like you and I, to central banks, and to ecosystems all around the world. So in the whole chain of the gold entity, from the exploration down to the refining, down to the trading, we play a key role in each of these aspects, making sure that all our operations are actually aligned to every international standard. Now, we've featured on so many broadcasts. We just had a recent EPCM MOU with EDGES Bitman to increase our operations and give fundamental perspectives to how we source gold. As I mentioned, if you've been coming to these presentations, you have always seen these slides. But as I've given you perspective to what the LBMA does, what the World Gold Council does, and what the OECD market does, you have seen how we actually comply with each and every of these standards to make sure that each gold that we are selling on our platform is actually structured and fundamentally valuable. Now, Dukia Gold assures investors, you and I that are participating in this gold ecosystem, that are investing with us, that your gold is actually sourced from international standards. There's no question, there's no debate about it. Because we are following all these rigorous sourcing processes, we can assure you that any gold you buy from us is actually doing the best of its ability, aligned with international standards. Remember, whether you are seeking to hedge against inflation, whether you are building long-term portfolio diversification, whether you are aligning your goals with life milestones, whether you are trying to build a pension fund, build a gratuity asset, whether you are planning for college, whether you are seeking for university, whether even if you just want to have a retirement asset, gold is actually the most valuable piece of commodity you can have to actually build up a portfolio and hedge against inflation. There's no questions about the demand of gold, the supply constraints of gold, and the structure of the gold pricing. But because the people who play a key role in all these entities are way bigger than us and way smarter than we will ever be, we are rest assured that gold will remain a valuable commodity for you to actually begin to build up your investments. We have done the same across the world. Central banks are still going to keep buying gold. The ESG guidelines will still continue to be followed. Technology will actually definitely play a huge part in determining the price of gold. But definitely for you as an investor, building success with gold must start today. You can regularly review your portfolio and begin to increase your allocations, making sure that the gold that you have is actually fundamentally accurate. And the best way to do that is by creating an account on Dukia Gold, clicking on sign up, verifying your KYC, and completing your registration. This is the best way you can actually see how you can actually hold gold as part of your portfolio diversification efforts. Thank you so much for staying with me throughout this presentation, and we'll begin to take the questions and answers. Thank you so much. My name is Emmanuel.
Emmanuel, you deserve a big round of applause. the way they do it on the internet now, I think. But if they don't do it, let me do.
Thank you
I
very much,
think
sir.
you have helped everyone in what they call a masterclass. President Women in Mining, I want to salute you, all our friends who are here. Mrs. Solani, I salute you. And Mrs. Alo, I salute you all. Again, thank you for taking us through a masterclass. The important lesson is that trading gold is a complex issue. And until you are fully educated, all I will say very quietly is buy gold, store it. Build up your stock first. Before you start trading gold profitably, you need volume. Even though there are people who have bought 1 gram at 50,000 naira, and that same gram has since crossed 300, 400,000 naira. And when they have sold, they have said to God, thank God we made a lot of money. But the challenge I always say to them is, if you bought at 500 or 50,000 and you sold at 400, and you're going to go and re-enter the same trade at 500, did you really make a profit? What you should have done is kept that gold there, go and look for that precautionary money you want to spend somewhere else, and keep your gold intact. Again, I repeat, in my opinion, gold will get to $6,000 this year. The reason is extremely onerous. There's the difficulty with a gentleman called Trump. I'm not certain the world has found a solution to him and to his policies and to his way of governing the United States of America. There's a problem with the American budget. It's way over what they make. And unfortunately, they've weaponized the dollar and everybody is pivoting away from the dollar. And again, the SWIFT system, which used to be the one that settled everybody, even including their MasterCard and Visa card, is being avoided. Therefore, the volume of currency that will go through transactions, or the volume of transactions that will go through currency called dollar, is bound to pivot. The Europeans are going to get more insular. The rest of the world is also going to get more insular. The Belt and Road Initiative has to be measured against the AGOA, and quite a lot of things are going to happen across the world. Even the Indians are beginning to look inward. If everybody does that, there is bound to be a major schism in terms of trade war, which again has become totally uncertain now. And I truly love the statements of Madame Okonjo-Iweala at the Davos meet. During Davos, she had said, wait and see is built to last. And indeed, the fact that we can all wait and see the Supreme Court in America challenge the so-called fundamental policies of their president, and he also reacting by calling a Supreme Court judge names, tells you a volume of what has happened. To that extent, it's not yet uhuru for tariff. The shocks are going to be imminent. It's most uncertain what they will happen over the coming weekend in Iran, Iraq. If they ever blow themselves up, then of course you can be sure that the Strait of Hormuz, the Suez Canal, and the future of trading in crude oil may just very well go out of proportion. But America needs to keep the price of oil down at all costs. The November election means that they've got to present a good face to the electorate in America. We, fortunately, in Nigeria, need a high price for our crude so that we can also afford a lot of things. But to the extent that the world will continue to move up and down, anyone who earns Naira and is able to save 100 Naira, please put 25 Naira out of that 100 Naira away in gold if your saving is to keep you happy in retirement. So if you are planning to keep 25 Naira away, for instance, in a building or a block, and you are not yet ready to mold that block because you are putting money together to build that house, which you want to be a retirement home, please buy gold with it, store it, and look at it, because by the time we see the next 365 days, there will be days when that metal may go as high as $10,000 if the Middle East explodes again, if Ukraine does not settle itself, if the Germans, the Italians, and the French come together to say, no, we're not going to deal with America anymore, if Canada is invaded finally by America, and a lot of odd things that could never have entered into the laws of probability take place because of the nature of the uncertainty. But what is important for us to say to you is that you are not being encouraged to be speculative. And we are not also encouraging you to get into the game of ETFs and paper gold. We're not. What we sell is physical gold, physical gold, physical gold. I repeat it again. And to ensure that your physical gold remains physical, we are happy to report once again that by the grace of God, we have been very diligent in carrying out our exploration activity. We have been most diligent in following the laws of physics. We have been most diligent also in following the laws of geography, the geologists, the geophysicists, the people who can tell us, yes, this is it, this is where it is, this is the length, this is the depth, this is the width, have been able to say to us, this is it, it's gold. And indeed, it also contains certain additional metals. We are grateful that we can confirm to you that that gold which we will sell to you, you can be rest assured of how it came, where it came from, and we'll be able to say to you also, this is your share of it. For the first time as a Nigerian, you will have access to your own natural resource. I wish everybody were able to buy 1 gram of 1 barrel of crude and keep. If you bought your barrel of crude in 1960 and you are retiring in 2025, which is 75 years or 76 years, you will see that the value has moved from X to Y. If you also had your gold and you bought it, for instance, you'd have seen that the value of your gold goes from X to Y. We will encourage everyone to either become a shareholder in the Dukia gold mining opportunity, and or if you can, buy the physical gold and store and hold it as your own lifetime retirement asset. We will also encourage you to tell your friends who don't know about gold what they need to know about gold, given that now Mr. Emmanuel has been very good and kind in showing us the many complex play about gold. The last point that we made, which I want all of us to hold, is that nobody can fix the price of gold. You can try to influence it, but you would also lose out. So buy gold because the trend is not predicted by us alone, it's an amalgam of predictions dealt with daily, weekly, monthly, even hour by the hour, minute by minute, second by second. So it's dynamic. But for you and I will make one Yoruba adage. Ariwo ọjà kọ́lá máa fi ń ra ọjà. Please don't look at the noise of the market to buy what you need to keep your future. Buy gold irrespective of what you hear currently that is going up, is going down. The reason is the general direction of gold is what you are buying, is going to go up. The general direction of the dollar is also what you are buying, is surely going to come down in terms of value. Protect your asset, protect your wealth, protect your future. Please buy gold. God be with us till we meet again. And I'll take questions and answers and allow Emmanuel to respond to any questions. Thank you.
Okay, Ma, I have the president of Men in Mining, Madam Jane Etademi. You can unmute him. You can mute him.
Thank you, Professor Emmanuel. Uh, thank you, Professor Emmanuel. We are extremely very grateful, and I'm excited. If you know how I was fidgeting because of the poor network on MTN in Abuja. We all know what the global tensions are right now, and we know that paper currencies are under serious threats. Yes. You've analyzed virtually every circumstances that is ensuring that gold prices goes up, and we see the trend, it goes up every day. Two quick questions I want to ask Dukia Gold. The first one is, maybe it is Uncle himself that will be able to answer this one. When you look at gold prices, generally even as it is, and the miners in Nigeria come to you and they want to sell their gold, I keep wondering, why is our gold extremely more expensive than even our neighboring country, Ghana, Mali, Burkina Faso, Angola? Because we get offers, people who want to buy gold, and when you ask our local miners, why is it that expensive compared to, because it's a competitive market and it's a global commodity. So that is one question. Then the second question is that in terms of the security to investors who put down their money. You mentioned the geopolitical tension, uncertainty that is coming up daily, and of course, people are rushing and seeking for safe havens where to put their money. But the fact remains, what happens? Is there any insurance thing to back up, even when like, let me give you an example, because trading is something we are all learning. It's not my purview. If you are talking of technical things, maybe I'll be able to flow easily. If I'm buying a ticket, for instance, maybe with an airline, it offers me a value, and something happens, maybe I couldn't fly. If I didn't do insurance, you understand? And that circumstances denied me the ability to even be able to cancel the ticket immediately. I forfeit my money. So if I buy gold from Dukia Gold, you understand? What are the securities in measure to protect that one, to be able to absorb shock in view of the geopolitical? Because for me, what you see globally looks like a world war coming up. Because like Uncle said, let's wait for the weekend and see what happens between Iran and the US. And we will find that alignments of countries are already taking place. America have lost their greatest ally. So what happens? If now we have pumped all our savings and we say, oh, we are having it somewhere, how do we secure? What do we have in case anything happens? I just want clarity on that. And finally, we will need a copy of your presentation. And I think you have to repeat this presentation to us about 2 or 3 times more, so that those of us that are babies in this sector, you understand, can flow to really understand it. Thank you.
Good afternoon once again, Madam President. It's a joyful day for all of us to have you amongst us. And I must thank you for the intervention that you have brought up. I'll answer the last one first, and then I'll let Emmanuel also give you. One of the key things that made us take a decision that we will not sell derivatives is such that everyone who buys gold from us can actually walk up and take delivery of their gold. You understand? We sell physically deliverable gold. We have no risk. There's no counterparty risk. Once you buy, we take gold from our own stock and put it in your own stock, your own gold allocated account. And in order to ensure that that takes place seamlessly, we keep all our gold for sale with Brinks. And as you know, Brinks is in London, is in Switzerland, is in everywhere. We keep account in 2 places. We keep account in Brinks London, and we also keep account in Brinks in Switzerland. You can basically buy gold, take delivery of your gold. A few of our customers regularly do it. We encourage you to also try, buy enough volume, 1 kg, half a kg, 10 grams, one ounce, and try to take delivery. You will find out that it's fairly easy to do, and it's also done seamlessly. The Nigerian customs, of course, would then need to come in and take their import duty for the product. You need to liaise with the DHL and whatever. But I'll allow Mr. Emmanuel to take us through the process of buying and taking physical delivery. We, however, warn everyone from taking physical delivery of gold, especially because we know that the value will keep on going up. And we've had clients who bought gold and suddenly got on Third Mainland Bridge to remember that they didn't lock their door to their bedroom and panicked. And the second day or third day after their so-called 50th birthday, 40th birthday, suddenly say they want to sell it back or we should come and help them keep it. Once gold leaves the provenance of the LBMA system, you have to re-certify it before it goes back into that provenance. It will cost you some money. Most people then start arguing about, no, I just took it out yesterday. As you can see, I didn't touch it. No, it's not us. It's the fact that you took delivery, took it home, and you're bringing it back. We have to check that what you took away is also what we are collecting. And when we send it back to the international community, because we also don't vote, we can't vote, we tried it in the beginning, it didn't make sense. So we always vote now with LBMA certified drinks. That way, we avoid the risk of somebody saying, we know your office, let's see if there's gold there. No, we don't keep gold at all around us. If there is gold at all, it's in the site. Once they finish it, they take it, and that's where it goes straight into a refinery and then straight to vault. So we ensure that you are not only covered, we are also SCUMU and AML compliant. And as you know, our capitalization matters a lot to us, as well as the quality of delivery of service. So everything about us is also triple insured. But the most important insurance is the fact that the person who keeps our gold is completely third party, which is Brinks. And the worst thing that can happen to Brinks is, God forbid, they go and raid them, and it's been done before. But it's not our loss, it's Brinks' loss. And the insurance that Brinks carries covers us. And the insurance that we also carry, if you happen to say you want to import, covers goods in transit up to delivery. So we are covered. You are safe once you buy physical deliverable gold. We don't encourage us or you to say, I'm buying ETF or I'm buying something that is paper trade. That's speculative. That's not what we encourage everybody. But let me go also, Mark, to your charge that says that gold in Nigeria is far more expensive than across the West African divide, especially for those who supply raw material. And I'm happy that you said it, because we've had clients who unfortunately try to say to us, oh, our product. And we say to everybody, we are not just a fair trader, we are an open source, very, very well-priced product. Again, there are people who said to us, they can go to Wuse Market, or they can go to Okeari, or perhaps they can go to Obalende or Ikoyi, Southwest, and go and buy gold. We always say to them, we wish you good luck. What you buy is what you keep. And a nation sometimes is in a hurry to do things right and to do things wrong. We are not in competition with anyone anymore in terms of trading for gold. And that's one of the most important reasons why we excused ourselves from trying to source gold locally through third party. We will control our own ecosystem now. That's what they're doing. We've found the gold that we would have ordinarily be begging artisanal marketers and speculative traders to bring to us, including the fact that what they are sometimes bringing came out of a war situation in Zamfara, or out of a child labor situation in Katsina, or perhaps a mercury-fed transaction out of wherever. We've excused that from our own ecosystem. But I know that two things are also happening in Nigeria. In the most recent past, ability to get dollar was challenged a bit. So people would always pivot their so-called dollar requirement into gold. Therefore, artificial people who want to buy the limited quantity of gold from the artisanals make it very, very expensive. It's also a fact that me and you know that some people come across strange money in Nigeria and again want to convert it into a stable currency. They try to do it into gold. Unfortunately, our system cannot absorb that because we are SCUMU and AML certified, and we also report based on your KYC. So if you are buying gold from us, and we say it very clearly, we can't sell gold to you and shut down. We hold the so-called trust of so many other people. Therefore, we've met people who say to us, I have money. When we ask you, can you write a note on the source of your currency? And they say, why are you asking that question? It's not us. It's that we have a community and ecosystem that allows you only to do things that are normal. Therefore, our pricing is extremely transparent. Our KYC is very, very intact. We are built and we are building this to last. If someone is planning to buy gold to retire in 25 years, Dukia Gold is planning to be around for 100 years and for another 100 years thereafter. So everybody who is trading with us, we're not just trading for near profit, we are trading for far-flung profitability and sustainability. Those two are our watchword, and therefore, correct, Nigeria continues to be a black market in quite a few fields, but hopefully when real supply of gold locally starts to take place transparently, you will soon see it. We should be able to deliver on a daily basis up to 1,000 to 2,000 ounces of gold for the Nigerian market to truly buy and participate in on a very transparent market. That's going to happen by the special grace of God shortly. And once we're able to say everybody has access to 2,000 ounces, what it means is at least anyone who says, I have $8 million legitimately can walk up to a platform, which will be the NASD, and say, I want to buy. That gold will be sold, and he can take delivery on the date that he wants to take delivery. We continue also to give you this spot purchase platform. Everybody has an app and or a web access to it. And once you buy, you want to take delivery, again, there's a way to take delivery. Once again, Madam President, I want to thank you for the quality of questions, the quality time that you spent. And also, I want to thank you more for championing the future of mining, especially for women, in a very transparent, sustainable, and total participatory way for Nigeria. You represent us all around the world. Thank you also for showing up in Cape Town. And more importantly, thank you for supporting our managing director. We wish you well every time, and we wish your members and you yourself especially all the very best. Good afternoon, Madam Janet, Doctor.
Thank you.
Okay, thank you very much, Ma, for those questions. Please, if you have a question, please just let us know on the chat. Yes, we don't. Yes, Ma. Yes, Madam President, we don't actually do recycled gold in our portfolio. But please, if you have any questions, just drop it.
Let me moderate that. Let me moderate that. So, Ma, we did recycle gold a bit, and the joke came from the Oshodi sellers. So, if you know Oshodi well, at one point in time, it was becoming fairly common sense for people's car to be raided and women to lose their jewelry. When we did our insurance review, there was no point in getting involved in doing that. However, we have since found some very sophisticated Dubai traders who buy jewelry, lose one earring, and want to sell it. We sometimes have encouraged ourselves to take a look at it and keep that line of trade open. But again, that requires for you and I to know the KYC of the person and for the person to be able to prove that that earring actually belonged to her. We don't want a house help who has cleaned out somewhere suddenly show up with half a kilogram of gold and saying that it belongs to his grandmother who came from 20 centuries ago. No. So anything to avoid us getting into uncharted waters. We sell investment grade gold, and investment grade gold matters a lot as to provenance. One thing we would shout and say to everyone is that we are provenance governed, we are provenance driven. We must be sure that every gold that we sell, 1 gram, half a gram, 1/4 of a gram, we will be able to tell you exactly who owned it, where it came from, who touched it before it got to you. Luckily now, again, I repeat, we are lucky to have found gold under the ground in excess of 1 million ounces by the grace of God. And we are certain that the only thing we want to do is sell it now directly to Nigerians so that you can truly say to yourself, I know the day the gold was mined, I know the day it was refined, I know the date it was delivered into rings, I also know the day I sold it to you, and we will know the date that you took delivery of it if you ever take delivery. If you choose to send it back to us, we'll also be able to include you in the provenance value chain and make sure that things work. The future is clearer to us now. It doesn't mean that if we then have legitimate gold, we will not touch it. But hopefully then we'll have a better way of quarantining such situations, which we couldn't be doing while we are focused on this larger project. But now that this larger project is a success, I believe we will be able to come back to people and say, you don't need to look for 1 million to travel to Dubai because you want to realize 400,000 naira on your gold. What we should do and what we're going to do is allow you to be able to take a taxi to a bank, partner bank, or our office, and basically send your equipment into an XRF machine. It's tested. Once it's tested, you show us proof of ownership. It's clear, we document. We should be able to buy gold as recycled gold from women. One other one that we were encouraging ourselves to touch was the recycling of gold from electronics. In the beginning, when we started, the feasibility was done. We tried it. We were going to work with an institution in Lagos to get some of the students to join us in dismantling some of the things that carry that gold. Again, electricity is not their friend, it's not our friend either. And therefore, setting up such a shop at that time didn't make sense. We are choosing to just first seek ye the kingdom of God, and every other thing will be added to us. So we are focused primarily in getting our mind sight sorted out. And to the glory of God that is sorted out now, we will then come back to those derivatives that are, like they say, value added to make our customers happy. Congratulations to Nigeria. We look forward to all of you being shareholders and stakeholders. Thank you. Emmanuel.
Thank you very much, sir, for that clarification. As I said, if you have a question, please just let us know on the chat. We'll answer our best, all your questions to the best of our ability. Now, this was just the Dukia Gold and SGS Bitman signing ceremony, as the chairman mentioned earlier. I've dropped a link of the events in the chat. So this was the signing ceremony attended by the management of Dukia Gold, the Honorable Minister of Solid Minerals Development, and the Business Development Manager of SGS Pitman, Mr. Moses Simon. So these are forthcoming pictures and events of all that took place. But to get further clarification, I'll still drop more information on the chat concerning the event, so you can actually take it home and read about it and see it. Now, you should definitely see it on your favorite news channels because it was already uploaded throughout today, but I'll just drop more information so that you can actually take a look. Thank you very much. Please ask your questions. I haven't seen any question. Please ask your question apart from concerning buying gold. Let me drop the FAQ on the chat so that anybody who has more information can still reach out. I'll still drop support emails so that in case anybody has a question that doesn't want to ask here, you can just send us a mail and we'll definitely attempt it to the full. Thank you all for joining. Madam President.
Again, I must thank you, Emmanuel, and I want to thank everyone. Each time we do this, we do it at the last Thursday of every month. We've done this consistently for the last 4 years. By the special grace, we will continue. Madam Janet, I'll let you talk very soon. I need to make 3 major announcements. Announcement 1 is that we are going to pre-sell part of the products that will come out of the ground from our mining allotment. And it's a question really of when is it best to buy physical gold? Do you want to buy it after it has been fully manufactured, or do you want to buy it when it's still in raw stage? If there's anybody who grew up around the time when all of us basically were in the cocoa trade or in the palm produce trade, you will know that usually people like HD and F-Man, Gottschalk's, UAC would come and prepay for the cocoa that will come out in September, perhaps in January. We're going to try that in our gold sales program. It will be tokenized and is to allow you to buy gold at what they call farm gate prices. Hopefully, that should be better priced, more attractive to everyone. Save up, borrow up if you have to take advantage of that when it comes. And my prayer and hope and belief is that you'll be able to enjoy part of the so-called dividend of being a stakeholder and ecosystem member. If you are interested, please send us a mail, register as a Dukia client, so that when the opportunity comes, you would have enjoyed a huge amount of benefits. Call it farm gate prices, call it discounted prices, call it introductory prices, but that is going to happen. The second one that I also need to let you know is that we're doing another round of private placement commencing sometime in March through April and May. That is going to be hopefully one of the last sets of private placements we do before we commence our final activity of becoming a PLC listed on one of the stock exchanges, which is what we're working towards. On behalf of all of us, therefore, I want to continue to thank all of you for your encouragement and say that may God, who truly watches over us all, watch over us all as we grow the ecosystem and also allow us all to participate profitably from the natural resource owned by God, given to Nigeria, and allowed to be traded by me and you as what they call gatekeepers of nature, being extremely responsible in terms of ESG, corporate social responsibility, and of course ensuring that we leave the world a better place. And then we also trade with everyone on a very fair basis. Thank you, ma'am. You may now have the floor, Madam Janet, so that MD can close the meeting. Thank you.
No, sir, I just want to ask Professor Emmanuel quick. Are we having a copy of the presentation? Is it
Yes,
sending
ma'am.
it to
Yes, yes, ma'am. The only challenge we always give everybody is we were releasing it to the internet before, but we've chosen to make it an exclusive club. Everyone who has a Dukia Gold account, and it's very easy to join, has a private mailbox. Once we finish, because it's actually meant for you, you will get a copy of the presentation. But Madam Janet, I know that as a professor yourself and as a PhD holder and mommy of all of us and president, you will get a copy. So don't worry about that one.
Don't
But
worry,
for
I'm even
everyone,
registering. I've chatted with boss to
yeah.
tell her that share the link and we register and then do the needful.
Okay.
And I
Thank you,
equally
ma'am.
want to encourage you, sir.
Yes,
You've done wonderfully well, and we discussed this in Cape Town. For companies of this age and century, if there's no World War and we all survive it, it's good to earn the badge. And the badge, that's the sustainability badge, is to be all-rounder. We look at the 13 templates, you understand, of the mining, MFP, the mining framework. And then, because some people just talk of GM, what do you call it? ESG, and it's becoming a fraud. There's a position paper on it, you understand, so that real auditing, so that if anybody comes, so they're able to see all the compliance.
Yeah, in fact, we have a very
to
educated community. You'll be surprised or shocked. Even in the community where we are working, the secretary to council apparently has a PhD in environmental science.
So that is good. All hands are involved.
But what they are happy about is that because we are committed to it, and they can see us as being fully committed and practicing it. To say it openly also, the MD, who is a member of your Women in Mining, has also discussed the need for us to actually work with you as a member of the Women in Mining, and of course, you in your personal capacity to add value to our corporate governance. We will discuss that eventually, but I want to thank you always for being a conscience to truth and for always speaking truth to power. But we are not powerful. We are only responsible. We would be a good corporate citizen, making sure that we do what is correct, whether it's auditing ourselves to make sure that we comply, or actually striving to ensure that we comply even whether or not we are being audited. Standards are standards. We shall continue to keep those standards, meet, surpass, and uphold them for the greater good of everyone. It only adds value to our shareholders, it only adds value to our stakeholders, and it only adds value to our ability to say that we came, we saw, and we left the place better than we met it. Thank you very much, Madam Jenna.
Thank you, sir.
I'll hand over the microphone now to Emmanuel and the managing director. It's 2 o'clock. It's time to go and pray, and those who have gone to pray at 12 or 1 o'clock, we want to thank you all. MD, everyone, bye-bye for today.
Thank you very much, sir, for that clarification. Mr. Nonsu Okoye, I hope I answered your question. You were saying, how would you know? The World Gold Council has the responsible gold mining principles for people who actually source for gold. The LBMA has the responsible gold guardians for those who actually refine gold. So any entity that is following these 2 laid down frameworks can actually be vetted by their operations. That's why there are cases where you can buy gold without having to fill a form, register your KYC, provide proof of identity. These are things that actually make sure that your gold that are actually accessing from the market is actually valuable and credibly sourced. So I hope I answered your question, Mr. Nonsu Okoye. So in the absence of any other questions or clarifications, I've dropped the links to our FAQ on the chat. So if you need far more information concerning how we navigate our platform, or if you need to just talk to someone like on a one-to-one basis, I've dropped our emails and there are links to our FAQs in the chat, so you can actually now get more information concerning what we do. So in the absence of any further clarification, I'll just invite the managing director to just, as she said, the opening remarks. It's definitely, she will just give us the closing remarks, then we wrap up the presentation for today. MD Mao, you have the floor.
Thank you, everyone. I think it's been a very interesting and very insightful session. I must say a special thank you to my honorable president who joined us today. She's a woman that wears many caps. She's a politician, she's an engineer, she's a mother, and she's the one that carries us all around. And she's very passionate about the solid mineral sector. We are so proud of you, Ma, and thank you for joining us. So to us all, our partners, our friends, our investors, thank you for staying through. It's been a long day, but I hope that it's been very useful for you. I've learned a lot. I say that just as you come here, I also come here to learn. So I will say a big thank you to Chairman and Emmanuel for the research that goes through all this, that they go through to present this to us. So thank you, everyone. If there are more questions, as Emmanuel said, you can get in touch with us and we'll gladly assist. Thank you. Dukia Gold is committed to adhering to international standards, the best practices in the industry. And that's why we continue to do all this enlightenment so that we can all make the Nigerian market, which is just developing. We can all have the requisite knowledge to make it to grow the way it should, not at least to do better than the way the oil sector has done. And we know that with all that is happening now, we are on a good course, and we are always proud when we hear that gold has gone in a particular direction, which is up, because that's what we've always preached, and that's why we've always encouraged this communal growth and investment. And by the grace of God, I know that better days are ahead, even with our mining opportunities. So thank you, everyone. We look forward to welcoming you next month again, where we will share even further insights. Thank you. Enjoy the rest of your day. Bye-bye.
Thank you, Ma, for that closing remarks. Thank you all for coming. On the last Thursday of March, we'll do another forthcoming presentation. Have a lovely day and see you at the last Thursday of March. Thank you, everyone. Thank you, Managing Director. Thank you, Chairman. Thank you, the President of the Women in Mining. Thank you to all our customers, our esteemed customers who currently make these visits possible. We wish you well, and we hope to see you next time. Thank you very much. My name is Manuel Waka, and bye for now.